what's the environment for renewables right now? I mean, you have an administration that, at least on the face of it, is not as amenable to the industry. Has that made things tougher?
Well, it's interesting to hear Ethan's report because we completely agree with that. The drive that's been changing from coal to renewables primarily, and natural gas, of course, has been driven by economics. Fundamentally, it's been shale gas. It's made gas cheap. But then over the last 10 years, you've seen dramatic decrease in the cost of renewables. So with that has come growth of renewables. And if you look at a coal plant, it's really difficult to reduce cost, whereas renewables are still on a steep cost decline.
At the same time, we still pay in the United States much more for solar than they do around the world. We have a chart we could put up actually shows we pay like twice as much as the rest of the world. Why is that?
Well, there are a lot of different factors, and I think that's changing dramatically. I mean, if you look at solar costs over the last 5 or 6 years, they've come down by about 70%. So some of the costs that you see with solar was sort of early projects that were put into the market, but current projects are starting to compete without subsidies with conventional power.
And now, it used to be when we were sort of further back in the solar industry in the United States that it was public companies who were owning a lot of these farms. And now you've got private funds like yours that are doing this investment. Why did that transition happen? And what are advantages that you might have over a publicly traded company in doing these kinds of projects?
Well, that's a great question because we just, as you may know, we just privatized one of those public companies. 2.5 years ago, we looked at this market and we saw that the buyers at the time, which were all these public companies called yieldcos, were starting to struggle. And we said, who are the natural owners of these assets? And the natural owners of these assets are long-term, yield-based investors. And so we fortunately were able to connect with some of the most savvy investors in the sector. And we created our first fund 1.5 years ago, which we invested fully, which include total capital of about $6 billion in the sector. Those investors have now reinvested with us. So I think the answer is that the natural owners of these assets are long-term investors like pension funds, life insurance companies, and that kind of thing.
And so they're long-term investors. They're patient capital,
Yes.
as it were. How does the money flow? I mean, do you start getting returns away? It's not like a bond where you get a quarterly payment or something. How does it flow back to you if you're an investor?
Well, it does actually start flowing right away. At the beginning of the life of some of these projects, you do have a significant amount of debt, and you have a sort of tax benefit type of debt called tax equity, and you do amortize some of that at the beginning, but there's yield from the beginning, and there's pretty stable yield for the life of these projects, which in many cases is 30 years or more.
Where are we in penetration in the United States in terms of solar? I mean, and also, what do you think that the sort of cap on that is? What do you think the potential penetration is? Because it's taken a long time even to ramp up to where we are right now.
It has, and people don't sometimes understand the size of the power sector. So despite all the solar that's been installed in the sector so far, we're still in kind of single digits in terms of the percentage provided by solar, for example.
Right.
If you look at the forward projections, the vast majority of new generation over the next 10 years is going to be solar and wind. And that's primarily driven by the fact that those costs continue to come down. So it's broader and broader penetration to the market.